Hello everyone, R2F here with another episode of Trade Like a Sniper. So let's get right into it. I'm on the euro dollar on the monthly chart right now, and that's where I'll start. So I'll scrunch up the chart and rewind to a random point of time, not too far away, maybe here. Okay, let's reset the chart view on the monthly and see what we have. Now we have the monthly heading higher. Let me annotate this monthly gaps here. Excuse me if you hear my son in the background. He's in the office today. So we had price come up to here, come into this gap, and it looks like it's going higher. So I'm going to fast forward a little bit to see what happens. Okay. All right, there's a little gap here. I want to see if we trade into there. If we do, I might take a short. So that's a monthly gap as well. Okay. Did we trade into that? We did ever so slightly. Okay, I'm going to go down to the weekly. Up into here. All right, so on the weekly, there's not too much. There's a gap up here. I want to go down to the daily and see if... Okay, there's not many gaps on the daily. In fact, there are no gaps on the daily. And it seems like it may come into here to take out this low. So in this case, this is my target. My first target, you could say. First high probability target. But of course, I may take partials along the way if I'm taking a short. So let's go down to the 4-hour. Find more information. So we came into there. Let's see if we do spike up one more time. All right, we're just going to annotate this, maybe this whole area here under the hourly gap annotation. Okay, we seem to be finding some support. Let's see if we go up. Okay. Oh. Okay, this 4-hour closes. All right, I'm going to go to the hourly. And if we can move up into here, I would like to take a short. So Asia, London, I'm going to remove this kill zone indicator. Okay, so let's say if price returns to this 4-hour, we'll look for a short. And where did we want to target? Our first high probability target is here. But let's take partials in this gap area. I think a little bit there, maybe 20-30%. There's equal lows here. Can take another 20%. One here in this gap, maybe at this point, and one below these equal lows as well. So how would I normally do it? This target is pretty close to the entry, so maybe 15%. Then down here, I'll take another maybe 20%. This is close to here, maybe another 10%, and maybe another 10, 15, and then the final amount here. If our analysis is right. So, okay, we're in the trade because it came into this 4-hour. Okay, I'm just going to fast forward. Let's see, we get out. Okay, first target hit. Came into this gap down here. I'm not going to go to higher time frames, although I could. But actually, let's see what happens. We make another low. Some time distortion. Consolidation. Okay. All right, second target hit. All right, so let's fast forward a bit. Okay, third target hit. Okay, we retraced all the way into here. So let's see if we move lower again. pretty much all the way to the top and still consolidating in this area. Let's fast forward. Okay, retrace, redistribution, and now we're going lower again. Is that target? Okay, that target is hit. Let's see if our final target is hit. Waiting, waiting, la la la. Boom. Okay, should go there now. Yep. All right, so great. Final target hit. Right, so let's just go through this quickly. What happened? This was almost a 7R, but of course we're taking partials. We're not going to get 7 times, what we risked. So it's better to be safe. So yeah, we came into this monthly gap, inversion gap, I believe, just by a tiny bit. Just by a tiny bit. We took out this high. We chopped around back and forth, and what I was looking at was this 4-hour gap here. Okay, we can refine it. There's probably a gap here on maybe the 5 or 6 hour, 7 hour maybe. Yeah, okay, look. Yeah, there's a 7-hour gap here. On the 7-hour, we didn't come into there, but we were looking on the 4-hour, right? That's why I prefer the 4-hour. So if a gap's been used before quite nicely and it's disrespected quite nicely, I can expect it to be an inversion fair value gap. It takes some experience to recognize these things. So that was why I entered here. And the bias was because of this monthly. No, sorry, it wasn't an inversion fair value gap. My bad. It was an actual CB. So it came into that, and my first target always is taking out the low. So that's why I have a higher time frame bias, so I can look at 2, 3, 4 candles and just anticipate a target there instead of looking at a whole chart and deciding where I want to take my profit. Okay. From there, what happened? Did I go down to the daily? Yeah, I went down to the daily, but there was very little. There was no gaps happening, so I went down to the 4-hour. So we saw a gap. Price came into it, couldn't make another high, closed low, and then we targeted here. And what were my targets? Gaps and order blocks. So there's gaps here in the 4-hour. Here's one of a breaker and a gap. Those are quite high probability for a reaction. So in this case, or reversal, right? So in this case, the reaction was coming all the way back up here for 46 pips. It did not break this order block in this market maker sell model. Over here would be the low risk entry. Here would be the first stage of distribution, second stage of distribution, and so on, right? So I'm taking profits at areas of liquidity such as equal lows, swing lows, and gaps such as this order block here, equal lows, the gap inside here. Okay, so yeah, pretty straightforward. That's how I approach the markets. Yeah, I hope you found that insightful, and I'll see you in the next episode. Till next time, R2F signing out. And I'm going to sign out soon as I find where that was earlier. Okay. Yeah, you can see what happened there, right? Here's where we got in, here's where we got out. Such a small move, but such a high RR trade.